budget. What we'll do is today we are just preparing the functional budget for the question 8.3 answer. So what I want to, you see this 31st December 2020, the balance sheet financial position is given. There, of course, you know, non-current asset is there. Raw material 400 kg, which is opening for the next year or the next month. Finished goods so much as at 31st December. So thereby January 1st, finished good would be the 4,000 units opening. Then this is debtors. You have to remember this is sales of November. This is sales of December. Those are the debtors, closing debtors. We have the investment, cash at bank. Then we have creditors, of course, suppliers of November and suppliers of December. So these are really payable to November supply and the December supply. These are debtors consist of two parts, which is taken place in November sales and sales taken place in December. So that's the idea we need to understand. Then the company has produced the plan of activities for the last 3 months. So we need to prepare the budget for last 3 months. Oh, sorry, first 3 months of the 2021, assuming that we are in this 2020. Sales, the company forecast sales for the first half of year 2020 are as follows. So January, February, March, April, May, June, you know, 6-month sales figures been given. And it says that 20% of sales will be cash and 80% will be on credit. And the prices are given. Direct labor and material requirement and also the unit price given. So thereby we can calculate the direct material cost, direct labor cost. Manufacturing overhead cost absorption rates are given based on direct labor hours. So thereby absorption rate is 80. So we can calculate the manufacturing overhead cost. We can absorb it. Non-manufacturing overhead costs are given. Variable selling expenses, 20 rupees per unit. Selling units per selling units, and you know, distribution, admin, and depreciations are given. Then the stock material, raw material equal to the next month production requirement will be maintained. Always raw material stock is next month production. Finished goods really equal requirement of next 2 months sales will be maintained. And work in progress 0, payment 2 months after delivery. Debtors, of course, there are three stages. 50% of sales on the in the same month, 30% of the following month, and 20% sales value during the second month after sales. So then the other direct wages paid in the month, and also manufacturing depreciation 120. This is per month. So thereby, sorry, annual depreciation 120, month depreciation is 10,000. 3 months is 30,000. Fixed overheads paid in the, yes. So we have to prepare income tax for the quarter ending 40,000, and income tax payable, which is on December 2031st. December 2031st will be paid in January. Okay. And all other non-manufacturing paid in the same month, and it is expected to trade investments 250, and investment will be sell for 250, which was in the balance sheet. So thereby 50 rupees profit. It is expected to pay the proposed dividend during the month of February. I think cash payments time is important for you to prepare the cash budget. So we will prepare all the functional budget first of all. Okay. So what I will do is I will use Excel sheet. So I hope that you can see the Excel sheet, and I have the answer, but I thought of doing the answer in the Excel sheet. And what I will do is, meantime, I will have the question also with me. So question is with me always, right? May I just give me a little time to make it, both. Yeah, okay, now I just want a little bit. Okay, good. All right. So based on sales figure, we are preparing the first sales budget. Sales budget for 3 months. So thereby 3 months, we have the January, we have the February, and we have the March. So that is our sales budget. According to the sales, of course, right? You can put in units. That is straightforward, 2000 given in the question, 2000 units, okay, and 3000 units. This is our sales budget, but sales budget can be converted into, credit sales and debit sales. So thereby I just focus that one also. Sales, I would say credit sales, I would say credit sales, how much? Credit, I will put first cash. Then, of course, I will put credit. That is credit. So I think you will agree with the straightforward. I will take the figure here to 2000, right? From the 2000, according to the question, it says 20% is cash sales, and that selling price would be 580. So that is my cash sales. Then again, the credit sales 2000, that is 80% and multiplied by 600. Agree? So thereby that is my credit sales. That is the budget. So you can see total. So all these are in rupees. All these are in rupees. Very simple. All these are in rupees. So that is, you can take the total if you want, really total, this column for the last 3 months total. Unit wise for the 3 months sales, so much if you want. And something like this. So thereby, so this is your, cash budget, sales budget. Basically, what we are expecting is, this much of total sales and this and that. Agree? Then what we can do is from there onwards, we can do some calculation about, you know, the cash. We will do it later on, no? Right, okay. Then we will prepare the next budget. Once you prepare the sales budget, if you are a manufacturing organization, you have to prepare the production budget. Production budget. So I hope that again, I will continue the same month, January, February month. I am not writing that, right? Sales, of course, sales requirement is, 2000 and again 2000. No need of writing this, but I just wanted to tell you where we start. So thereby we need to find out, this is sales requirement. For the sales requirement, what you have to do is you have to minus the opening stock, opening finished goods. I would say opening finished goods, right? Opening finished goods you have to minus, and you have to plus the closing finished goods. Okay, then you can find out closing finished goods. FG means finished goods. So we have to find out the closing finished goods from our question. So just see where the finished goods data, and you can remember one opening finished goods, you can take it from the from the balance sheet, which is 4,000 units. 4,000 units, right? So within bracket 4,000 units, because you are deducting it. Okay. Then you can find out the closing finished goods by using the policy. The finished goods equal to the requirement of the next 2 months sales. Next 2 months sales. So what is the next 2 months sales? So next 2 months sales would be, now we are in January end, so thereby it's really 5,000. Next 2 months sales, 5,000. Right? Then this would be the opening stock of the next month. And February month would be March and April finished goods, that is 7,000. And that 7,000 would be, opening for the March, and the closing would be March finished good closing would be April month and the May month sales, which is 10,000. So that is the closing opening. Then you can get the, each month production requirements. So this is the production requirement. Production in units. So you have to produce 2021 January 3,000 units, 4,000 units, and 6,000 units respectively. That is the production. Okay. Then we need to prepare, once you decide the production budgets, so you see that production budget depends on the sales budget, sales quantity. That is the principal factor or the limiting factor. And based on production budget, we can calculate the material usage budget. We can prepare material usage budget. Material usage budget. Here we have only one material. Therefore, it's very easy for us to prepare the material usage budget. So material usage budget is based on production schedule or the production plan, production units, right? Or production units, you can remember it's 3,000 and here it is 4,000 production units. We have to produce 4,000 and here we have to produce 6,000 units in the month of March. And we need to find out how many the material requirement for one unit, material requirement, or we can say direct material, DM for one unit. DM of one unit is given in the particular scenario. You see it is 2 kgs, 75 rates. 2 kgs, 75 rates. So thereby, so you can say 2 kg. 2 kg, right? 2 kg. Okay, here also 2 kg, 2 kg. Then the requirement would be the material usage, right? We can say direct material requirement or usage. How much? So thereby, this 3,000 multiplied by 2 kg, that is 6,000 kg. I'm just putting it because it is simple. Here 2,000 kg. Here it is 8,000 kg. And here it is 12,000 kg. Agree? That is called material usage or material requirement. Material usage or material requirement. So material requirement is based on, material usage is based on production budget. So thereby the production manager should now get, should have this much of material in the January month, in the February month and March. He will consume this much of material just to meet the production line. So then we can prepare the purchase budget. Purchases budget. So purchases budget is based on material requirement. You can say direct material usage or requirement. It's you see, it's basically usage. It is 6,000 kg and 8,000 kg here and 12,000 kg. What we are doing is we are making the opening stock, opening raw material or direct material. You can say direct material, whatever raw material. I would say direct material. Then closing raw material or closing direct material, whatever the words you are using. So we can find out opening raw material from the balance sheet, of course, 4,000 kg. 4,000 kg. So thereby we are deducting 4,000 kg. And we need to find out the policy of finished raw material. It says that stock of raw material equal to next month production requirement will be maintained. Next month production. So always next month production. So thereby, so here the next month production would be 4,000, right? Then it will be opening. Here next month, production requirement, next month production requirement. You have to understand next month production requirement, not the next month production. So thereby, next month production requirement is, 8,000. I'm sorry, not the 4,000. Word is requirement. And here it would be opening. Then here it is 12,000. This has to be minus, no? If I'm making a mistake, you have to tell me. Here it is 12,000. And third, for the March, April production requirement, we don't know. So thereby, I think it's you need to calculate the working, or you can continue it. Just look at the sales for the April month. It's 4,000. April month sales is 4,000, and you know that this 10,000 would be the opening, and closing would be the next 2 month sales. So next 2 months sales for the April would be 14,000. So that working is required for us to calculate the month of April production requirement, which is production, it is 8,000. So thereby this 8,000 is here. I'm just putting here, and if you multiply it by it, it's 16,000 kg. Of course, that is a working which is not required again when our preparation of budget. So this column is not relevant for the answer. It is just calculation. So thereby the closing balance here would be 12,000 here, and of course here it is 16,000. Okay, so thereby you get the material budget. So you can get it total material purchase budget. Of course, these are in kgs. Material purchase or direct material kg. That is in kg, not kilos. So that is about purchase budget. You see that purchase budget is prepared based on the material requirement. Now sales budget, then the production budget, material budget, purchase budget. Of course, since we have figures, for example, you can really convert these raw material usage and material usage and purchase budget into sales. Of course, you can see material usage in rupees here if you want. Usage in rupees, I think you can remember one material kg was 75 rupees. So thereby here 6,000 multiplied by 75 rupees is the cost. Here also 8,000 kg multiplied by 75. Here 12,000 multiplied by 75. That is the case. So that is the material usage in basically in rupees. But what you can do is further, if you want, you can convert direct material purchase in rupees. How do you do it? Just multiply by this 10,000, 10,000 multiplied by 75, so much of material. Then this multiplied by 12,000, that is 75. Then this multiplied by 16,000. I can take it directly, but I'm just, you know, for you to make you understand, and just put in the figures. Okay. So that is about the material purchases or purchase budget, which is in rupees. Now, remember, out of these, we have prepared 4 budgets here. We have prepared the sales budget. We have prepared the production budget. We have prepared the material usage budget, and we have prepared the purchase budget. Remember that out of these 4 budgets, when you look at the cash flow or the what you call cash budget, sales budgets and the purchase budget will have an impact on cash. Production budget and material usage budget, nothing to do with cash budget. So thereby we need to look at the sales figures. Of course, credit sales, cash sales is not a problem, but credit sales, we should know the timing of receiving, that is credit policy. And also purchase budget, we should know timing of payment, which is credit suppliers credit policy. We will talk to that later on when we prepare the cash budget. Right? Then we have direct labor budget. Direct labor budget. Remember, we don't prepare 2 budgets for direct labor like raw material, because raw material usage and raw material purchase is 2 different. The difference, the reasons for difference is the stock, but in labor there is no such stock. So thereby labor requirement and direct labor budget, whatever the name is same. So we prepare the labor, and also it's based on again production. Remember, it's labor budget also based on production, that is 3,000 units production, and here it is 4,000 units production, here it is 6,000 production. And we have to find out labor hours requirement here, direct labor hours. I just put direct labor hours per unit. Per unit in the sense, per unit for the production, which is 1.5 hours. 1.5 hours, right? 1 hours. So thereby direct labor requirement, requirement requirements would be half of production, that is 4,500. Now this is in hours. This is in hours, direct labor hours. Here, 6,000, no? 6,000 hours. Here, 9,000 hours, labor hours. So if you know the cost of direct labor hour, so you can calculate the direct labor cost. Direct labor cost would be 4,500 multiplied by 4,500 multiplied by 120 rupees. That is the cost of the labor. Here it is, of course, 6,000 multiplied by 120. here it is 9,000 multiplied by, right, my 120, right? That's the labor cost. So we have the labor cost. As per the question, labor is paid in the same month. So thereby, I would say this is an outflow for us to prepare the cash budget. Make cash budget outflow එකක් වෙනවනේ. Right. Shall we go to the next budget? The next budget is production overhead budget. Production, I just write the abbreviation, production overhead budget. Production overhead budget, of course, again based on the production plan, but we need to understand how production overhead is being absorbed. According to this question, item number 4, manufacturing overhead costs are absorbed to the product on the basis of direct labor hours. So thereby production, direct labor hours. So thereby, you know, production, again, we can take the direct labor hours directly without writing direct labor hours, because we have that data, 4,500 hours, right? And we have the 6,000 labor hours, okay? And we need 9,000 labor hours in the month of March, okay? And, you know, production labor hours per 80 rupees, so thereby absorption rate is 80 rupees, right? 80 rupees absorption rate, 80 rupees absorption rate. So thereby what you can do is you can just multiply production overhead cost would be, right, budgeted production overhead cost, or the overhead would be 4,500 into 80 rupees, 6,000 into 6,000 labor hours into 80 rupees, right? And also 9,000 labor hours into 80 rupees. So that is the labor production overhead cost, and which is also have an impact hit on the cash budget. So thereby I am putting it in the same month. So you have to remember that have an impact on your what you call cash budget. Okay. Then you have to prepare the what you call other overhead budgets. Now, before that, there is just see, when you look at this production overheads, see whether there are non-cash flow items. You have to find out whether, especially this includes any, you know, depreciation. Is there? Here, manufacturing overhead cost includes annual depreciation of machinery, 120,000. So 120,000 fixed overhead is incurred equally amount and paid in the month. All right. Here you see that here there is a annual 120,000 what do you call manufacturing overhead. So thereby you see the monthly fixed manufacturing overhead is 10,000. So thereby when you do the cash flow, remember you need to remove that 10,000 from these figures. 10,000 from these figures. Okay. Right. We will prepare the what you call non-manufacturing overheads budgets. Non-manufacturing overheads. non-manufacturing overheads, right? Non-manufacturing overheads budget. That is straightforward given. We have the variable selling expenses. Selling expenses. Of course, selling expenses depends on the sales value, which is given in the question 20 rupees. Sales how much? 2000, 2000, 3000. This is 2000 into really 20 rupees, which is 40,000. Here also 40,000. I think other place 6,000, 6,000 into, no, sorry, 3,000, 3,000 sales unit into 20 rupees is 60,000, which is your selling. Then thereafter you get the distribution cost. Distribution, of course, 15,000, which is fixed. So thereby each month you will have 16. Then admin cost is 25,000, which is fixed. So thereby each month, whatever the sales, irrespective of your sales figure, admin cost remain constant. Then depreciation, which is again 10,000 here, which is non-manufacturing. Earlier we talked about manufacturing depreciation. So altogether 10,000. So that is about your what do you call the non-manufacturing overhead budgets, 90,000. All right. And remember, this is total. And remember, this is, even though this is 90,000, it has an impact on cash flow, but this 10,000 we need to really remove from this 90,000. So thereby actually cash flow would be 80,000, 80,000 and 100,000. So that is all about the budget. So we have prepared now the direct labor budget, and we have prepared the production overhead budgets, and we have prepared the non-manufacturing. Those are called functional budget. In addition to this functional budget, we have the cash budget. So thereby we prepare the cash book or the cash budget. Cash budgets, we will have receipts in the cash budget. Receipts. Okay. Then I think you can remember the sales of investment is there. You can say cash sales. You have the cash sales, and you have the cash from debtors, or whatever the words you use, cash from debtors. Then you have the total sales, total receipts. Total receipts. Right? Then you have the payment. Payment. Under payment, you have different payments. You know, you have the payment to suppliers. You have payment to suppliers, is it? Right? Because you're all purchases are on credit. Then you have to pay direct labor cost. Then you have production overhead cost. Right? Then you have non-manufacturing, non-production overheads. Then you have, I think I can remember, tax payment. There was a tax payment. And also there was a dividend payment. Dividend payment. Can you remember we had a dividend payment? Dividend payment. What else? Yeah. So shall we start identifying those expenses? It is expected to pay the proposed dividend during the month of February. Month of February. What is the expected dividend? 50. That is 50,000. So thereby you are paying the February month. This is January, February, March. Dividend is 50,000. I'm just putting 50,000 here. Then tax, of course, there is another note for the tax. You see that income tax for the quarter ending 31st March, 40,000. And it is to be paid 31st March, and further tax payable 31st December will be paid in January. You'll see that. How much tax payable here? Here 30. That 30 you are making it in this month tax 30,000. Okay. And also the tax for the quarter is 40,000, which is payment is in March. Then we can take the total payment, no? Total payment. Once you take total payment, you can add the opening cash. Opening cash. Then you can got the closing cash. Whatever the name you use, opening balance, closing balance. Yeah. I think you can remember opening cash balance is there 6,400. Again, the hustling make the hustling but I just put the zero also. Then we need to find out non-production overheads. Non-production overheads is basically all these, and here all these and all these. I think you can remember, you will agree with me, not the 90,000. It is, we need to reduce 10,000, that is 8,000. Here also 8,000, right? All 8,000. Here 8,000. Why 8,000? Because you have to deduct the depreciation. But here 110,000, 110,000, we take 100,000 because depreciation we have to reduce. The production overhead cost here, production budget, even though the production budget is 360, 480 and 700, that is true, but annual depreciation is 120, monthly depreciation is 10,000, so thereby you have to take, you have to reduce that 10,000 here, so thereby it is 350, and here 470, and here 710. Okay. Direct labor cost, I think very easy. Direct labor cost 540. You can put 540 here. And here how much? 720,000. Direct labor doesn't have any depreciation, it's straightforward. You are making that payment in the same month, so thereby without any issue you can put the amount. There is no problem, so you can put the amount from the direct budget. You can copy it, but I'm not copying it, right? Mega karana lazy but I am just putting the traditional methods. Then we can find out the supplier's payment. We need to go to the supplier budget, that is purchase budget. Just look at this, the purchase budgets. We need to find out what is the policy. Policy is payment for raw material are to be made an average 2 months after the delivery. 2 months after the delivery. So thereby, so November creditors will be settled in November supplier. We need take 2 months. That is December, November, and December. So thereby, so you have to pay this supplier opening balance here in this month. And this one, yes, any question? Sir, sorry for the interrupting. The following in the January purchases budget, how did you derive 4,000 as opening? Direct matter. I think it should be 6,000 because during December we keep aside a stock of raw material to next month production. All right. You are correct in a way. According to the, we have to remember we prepare the budget for the next 3 months. Now, when you talk about the what do you call January month opening, January month opening means December closing. So that December already taken place. We take that figure from the balance sheet, which is 4,000. Yeah, I'll come back to your next question. So I think first answer is why we are not taking, because sales in this month, raw material is open and direct material we take from here, 4,000. I don't know what is 4%. Sorry for January purchases budget. Why did you derive 4,000? I think it should be 6,000. How it could be 6,000? Yes. As I told you, this 6,000 kg we won't take because December is already taken place. We take the opening balance from the given balance sheet. If you look at this particular stock policy itself, you are correct, it has to be 6,000. But if you look at the balance sheet, actual data is given. So you take the opening. January opening as 4,000 kg. Then next question was also we can pay supply in February for 30,000. Right, we'll take it. What is the answer for payment side? Right, good. Now, right, okay. Now this supplier 3,000 because we take 2 months. We take November month and December month, so thereby we are making the payment in the January month for the November purchases. Likewise, for the December purchases, we make the payment in February because we are taking 2 months, 75. Right? Then okay. Then this 300, supplier 750,000, we are making this one. Okay. And you have to remember which is not paid according to our scenario, which is not paid should come to the balance sheet. These two figures should come to the balance sheet as creditors because we are making the payment 2 months after. When we prepare the balance sheet, financial position as at 31st March, so these two figures should come. I think payment side is over. So you can get the total payment. No, sorry. Yes, total payments. No? Right. Then we will go to the receipt side, sales of investment. You can remember, as per the investment, the book balance, trade investment is 250, 200. We are selling it 250 and you get book balance carrying amount 200. So thereby there is sales of profit is 50 rupees and we are getting an income of 250,000. We are getting an income of 250,000. I think cash sales also, we can take straightforward cash sales, 232, 232, 348, 232. මේවා කෙලින්ම ගන්න පුළුවන් අතනින් මම එහෙම දැම්මේ නැති වුණාට copy කරන්න පුළුවන්, but I am just doing it. I just won't do it slowly, that's why I'm typing it. Yes, and here it is 348. I'm taking it from the cash budget or the sales figure. Gain is, this trade investment 250, but gain will come to the income statement, not to the cash budget, remember? Here the carried amount trade investment is 200. And as per the question, it says that you were able to sell the investment at 250 here. 250. So thereby the profit of 250 is there, but we will consider it as when we prepare the income statement, not the cash budget, but cash budget, you get the 250 sales income. Then the debtors, which is a little bit, you need to understand very clearly. So we'll go to the debtors policy. 50% sales during the month, 30% sales during the following month, 20% sales during the second month. That you have to understand. We go to the sales budget and you know that we have November sales, November. We have November, December, then January, right? Then March, January, February, sorry. February, this is our working, March. If you can understand, no need of preparing such a schedule. And you can put 50%. You can put 50%. Right? You can put 50% and you can put 60%, sorry, 50%. You can put 30%. Okay. And you can put 20%. That is how you get your money according to the, I think since we are considering this 3 months, we focus on this part, right? We will do that way. So 50% of your sales, here 960, you take the 50%, right? 50% means only 5.5. Yes, 50% multiplied by 0.5, you get the 50%. And here also 50% from your sales, which is again 960. I think you will agree with me, same figure. Okay. But in the March, of course, for the March sales, which is this much, and you take 50%. That is 50%. But when you look at the balance sheet of your balance sheet, you see that November sales 250. November sales 250 is, I think, which is equal to 25, how much? 20%. This 256 is equal to, so thereby you will get that one in January, 256. And you see that the December sales, of course, will consist of two parts. December sales, of course, will have really December sales value is 600. That is true, but which is equal to 50%, which is equal to 50%. So we need to allocate it between 30% and 20%. So thereby what you have to do is 600,000, right? Divide by 50% and multiplied by 30%. So you get a figure which is 360. 360. And 20%, of course, same formula. What I will do is multiply it by 20%. 20%, which is 240. 240. So this 30% you will receive in January because it is 1 month later. And this 240 you received in here. Okay, so thereby that is the answer. That is how you divide this the balance sheet debtors according to the credit policy. According to the credit policy. And here February, of course, you will get a 30% from this particular 960, no? 30% from 960. And here also you will receive 30% from the February sales. Okay. And here what you do is, here 20%, you will get the 20% from 2 months, or you are in March. So thereby this 96, 960, which is your January sales, you get 20%. So thereby January sales recovery would be this way. This one, then this one, and this one. That is January sales. February sales would be this one. I just shall I put another color? This one and this one, which is 30%. And you need to receive another 20% from your, February sales. So thereby debtors would be February sales into 20%. And March sales, of course, you will have the March sales 50%, which is this one, and you will receive 30% of March sales, which is this, multiplied by 30%, and another 20% of March sales here, another 20% of March sales here, that. So thereby, debtors would be, this is the February sales. If I am putting in a right sales Feb 192, and sales March, of course, two figures, 432 and 288, right? So those are the balance sheet figures. Anyhow, what you have to do is, in your cash book, these are the totals. So you put this and this and this as per your debtors, collection from debtors. Okay. So what I will do is collection from debtors. How much? I take this one, right? And I take this one, debtors from here, this one, and here this one, no? Yes. So that is about debtors. Now what you can do is, you can take the, you have to understand very clearly the credit policy. In this case, credit policy is a little bit complicated. 50% in the same month, 30% in the next month, another 20% just after 2 months of the sales. So based on that, we have calculated, that is the cash budget, total receipts, which is really, you see. So this is total receipt. This is total payment, total receipt, total payment. And you can get the net receipts, of course, by including another thing. I'm sorry, I just forget about net receipts, or net receipts, or yeah, net receipts. You can put net receipts. Receipt, yeah, spelling is, there's a spelling REC 111. Yes, net receipts. RECEI. Yes. Okay. So how do you get it? Total receipts minus total payment, which is, I'm just making it, and your closing balance would be just, you know, so this one, then this would be your opening balance for the next month. Then you get the total, right? And here it would be this. So finally, your closing balance is negative 66.5. But if you want, you can prepare the what you call total column of the cash book. No problem. Cash budget. You can prepare the total. I will look at the questions later on. just give me little time. Yes, first of all, I will read it. Sir, can you should debtors payment working again for a while? All right, okay. Again, say, yeah, I can do it, no problem. So what you have to do is, I will do it. No, listen, please listen very carefully. This is a little bit complicated. Now, you see, according to the balance sheet, we have debtors of 256,000 in November. This is November sales. And December, we have 600,000. You know that we have a policy 50%, 30%, 20%. Now, if I'm putting it 50% sales income, you got it this month. And 30% previous month. This month you got it. If I'm talking about the so shall we just put on this way? November, right? You get 50%. November sales I am talking about, and you get 30% here. And you get 20% here. What is this? This is November sales. So make a say sales. I'll put this way, then you can understand. November sales, November sales, November sales. From November sales, you get 50% in November. That is cash flow. December, you get another 30%. Right? From the November sales. And the balance 20, you get the January. Right? So thereby, what was in your balance sheet as 256 November, right? This amount we are getting here. January. Because January, you know this. Then if you talk about December sales, right? Sales December, not the November. I'm now talking about the sales December, right? Then you received 50% here, December month, because December sales 50%. And the 30% and 20% you get 30% here and another 20% here. You got my point. So thereby you see that December sales, the balance 50%. Balance 50% means in the same month you get the 50%. So thereby balance 50%, you get 30% in January and another 20%, 20. So thereby when you prepare the balance sheet at 31st March, 31st December, the balance sheet should show 50%. So thereby here, as per the balance sheet, 600 rupees, 600,000 rupees consist of 50%. That's why I encourage you to divide that 600,000 by 50 and multiply it by 30 one time just to get this figure. And another time, 600,000 divided by 50% and multiplied by 20%, which is this. So 600 වෙන්න. ඒක තමයි මම මේ කරේ. එතකොට May 360 එනවා January වල, May 240 එන්නේ February වල. I hope you got it very clear. Then what I did was 50%, of course, you can get now very clearly. January sales වලින් 50% මෙතන තියෙනවා. February sales වලින් 50% මෙතන තියෙනවා. March sales වලින් 50% you have here. Right? And here, how do you get the 280 is, මේ තියෙන්නේ 130ක් මොන එකෙන්ද? ජනවාරි වලින්. මේ තියෙන්නේ පෙබරවාරි වලින් 130ක්. පැහැදිලිද? මේ තියෙන්නේ ජනවාරි වලින් 120ක්. එතකොට අපිට කියන්න තියෙන්නේ ජනවාරි මාසේ සේල්ස් සල්ලි ටික රිකවර් වෙලා ඉවරයි. මේ කොළ පාට මේකෙන් තියෙන්නේ ජනවාරි මාසේ සේල්ස් ටිකේ සල්ලි ටික. හැබැයි පෙබරවාරි මාසේ සේල්ස් වලින් 50% හම්බෙලා තියෙනවා, 30% හම්බෙලා තියෙනවා. තව 20% හම්බෙන්න තියෙනවා. පෙබරවාරි මාසේ සේල්ස් වල. මාර්ච් මාස සල්ලි වලින් සේල්ස් වලින් 50% හම්බෙලා තියෙනවා. තව හම්බෙන්න තියෙනවා 30% in March, April. එතකොට මැයි මාසේ හම්බෙන්න ඕන, මේ වල හම්බෙන්න ඕන another 20%. එතකොට මම මේ කිව්වේ sales debtors දාලා තියෙන්නේ February sales වලින් 192යි, March sales වලින් අපිට හම්බෙන්න තියෙන 432කුයි 288කුයි when you prepare the balance sheet 31st March 2021. I hope that you got it, but just prepare a table and just do some work, then you can understand there is no big thing. It's easy. Okay. Right. I hope that you got the answer very clear. We prepared the cash budget. Now what we do is we will prepare the income statement. Budgeted income statement. Budgeted income statement, very simple. You have the sales, turnover, you know that is cost of sales, right? You have the cost of sales, and you have the gross profit, GP, and you have the other income. If you have other income, you can put other income. I think in this case, we have a 50 rupees other income. Then we put the expenses. I put all the expenses as one time. All the expenses would be, we can take the total, no problem here if you want. Total ගත්තනම් ලේසි නේද අපිට? Total ගත්තනම් හැම එකේම. the total ගන්න පුළුවන් අපිට මේ හැම එකේම අපි පෙර වැඩ කරනකොට ඒ ටික කරගන්න ඕන නේද? So you get the total. Yes, I think your answer 290 is the total expenses, no? 290. එතන මෙතන මම total දානවා 290. මේකේ ಜಾති ගොඩක් තියෙනවා, depreciation තියෙනවා. මේකත් හදන්නේ මම 50 අපි හදමු 1000 වලින් හැදුවාම ආයි කචල්නේ 290 290,000. Total expenses I took right, including admin, selling expenses, distribution cost, everything here. Sales, of course, you can get from here. Sales budget, total sales is so much. Here total sales, 4172. මෙතින් total sales rupees වලින් නේද? එතකොට ඒක 4172 මෙතෙන්ට දානවා. මම ඒක copy කරන්නේ නැහැ, නිකන් දානවා 172යි. Lazy or athering copy karana, but we will just do it this way. Cost of sales api calculate karanna ona. Cost of sales calculate karanne mehemai. Opening raw material tiyeno, right? Purchases tiyeno. Closing raw material tiyeno. Neither closing raw material. Make workings. The opening raw material over the matakati, opening raw material, tipa pay, raw material purchase budget take median opening raw material, closing raw material. The opening raw material 4,000 TNA. 4,000 අපිට balance sheet එකෙන් ගන්න පුළුවන් කෙලින්ම මුකුත් කරදරයක් ඕනේ නැහැ. නිතර 300,000 තියෙනවානේ balance sheet එකේ. 300,000. Purchases you can take from the purchase budget. Purchase budget, of course, you can take the total, no problem here. ඉතර 2,850ක් එනවා. Purchases 2,850.02. Closing raw material ගන්න පුළුවන් මෙතනින්. Closing raw material තියෙන්නේ මෙන්න මෙතන නේද 16,000ක් තියෙනවා closing raw material kg එකක් වෙනවා රුපියල් කීයක් වෙනවද එකක් වෙනවා raw material එකක් 75 ගානේ. ඒතර 16,075න් වැඩි කරනවා නේද 16,000 kg වැඩි කරනවා 75න්. එතන අපට ඒක මේක ඇත්තටම අඩු කරන නිසා මයිනස් කියලා ලියා ගන්නත් පුළුවන්. ඒතර අපට ලේසි. එතකොට අපට එනවා cost of raw material මෙච්චර ප්‍රමාණයක් 1,950ක්. මං හිතන්නේ ඔබ එකකට එයි raw material usage එක ගත්තත් ඒක එතනින් ටැලි වෙන්න ඕන. එහෙමත් වෙන්න ඕන හරි විදියටනේ. 1,950 මේ තියෙන්නේ. ඒ කියන්නේ raw material usage එක තමයි raw material මේ අපි ආරම්භක තොගේ purchase එකතු කරලා මේකෙන් ගන්න. මේකට එකතු කරනවා direct labor. එතකොට direct labor කියන එක ඔබට මතක ඇති අපි ගාව තියෙනවා direct labor budget එකෙන් අපි ගන්නෙ. ඒකත් මම හිතන්නේ මොකද මෙතන අපිට ඒක අපිට කරන්න තියෙන්නේ මෙතන total එක ගමු අපි direct labor budget එකේ. So you take the total, no problem. You take the total, right, of 2,340යි. එතන අපි මේක 2,340යි කියලා දාන්නත් පුළුවන්. නැත්නම් ගේන්නත් whatever that is. Right? එතන direct labor, production overheads, production overheads you have to take including the depreciation, which is this one, total production overhead. How much? 1,560යි. 10 වලින් නම් 1,560යි. Right? Then you get the manufacturing cost. MC, manufacturing cost is just these 3 items. එකට අපි ගලපනවා opening finished goods අඩු කරනවා closing finished goods. Opening finished goods value you can take it from the balance sheet. You have the finished goods 2,100 කියලා කියන්නේ 10 වලින් තව බිංදු 3ක් දාන්න ඕනනේ. You are putting 3 zeros, right? The closing finished goods would be how much? You go to the material production budget here. Closing would be 10,000. Closing finished goods would be 10,000. But here it says very clearly, where is it? Valuation of inventory, there was one line item. Can you find out where? There should be a guideline for us. Here. Finished goods equal to the requirement of the next month, 2 months sales and will be maintained at stock, and finished goods are valued at prime cost. Finished goods value කරන්නේ prime cost එකට. Prime cost එක මොකක්ද? Prime cost එක තමයි direct material cost. Direct material cost එකකට යනවා kg එකක් රුපියල් 75 ගානේ නේද? එතකොට එතන 150ක් මම මෙතන දැම්ම නිකන්. ඊළඟ direct labor, that is the prime cost. only the direct cost are called prime cost. 1.50 sorry 1.5 labor hours multiply කරනවා රුපියල් 120 නේද? එතකොට 120 වැඩි කරොත් 1.5න් you get 180. එතකොට prime cost එක unit එක ඔන්න ඕක 330යි. එතකොට 330යි කියලා කියන්නේ 10000 වැඩි කරනවා unit 10000නේ වැඩි කරනවා 330. එතකොට no valuation. එතකොට you get the cost of sales, COC, cost of sales. But remember this has to be minus. අමතක වුණොත් ඒක එකතු වෙනවනේ. ඒක තමයි case එක. එතකොට අපිට එනවා cost of sales එනවා නේද? cost of sales එනවා manufacturing එකට මේක එකතු කරලා මේක අඩු කරාම එනවා 465යි 1000 වලින්. එතකොට මෙතෙන්ට ගන්නවා අපි මෙන්න මේ 465. ඊගේ loss එකක් එන්නේ මට පේන හැටියට නේ. gross loss එකක් එන්නේ. හතරයි 650යි අන්න ඔක එනවා. මොකද ඒ කියන්නේ? සමාන ලකුණු ගහලා තියෙන්නේ. කොපි කරලා නෙවි. හතරයි 650යි තුනක්. What is the idea? To the my total opening finished goods and RM inventories. Is it wrong? 2001 is total. Finished good opening is what that? Opening finished goods. I think I have made a mistake. No, we'll see what. Yes. We can go to opening finished goods. Yeah. Opening finished goods 4,000. Because when you prepare the production budget, we take opening finished goods from the balance sheet. මේ balance sheet එකේ තියෙන එකෙන් තමයි finished goods ගන්න. එතන තියෙනවානේ you are correct. Not the 2100, it is you are correct. That is 1100, no? 1800. You are correct. I'm sorry. That is correct. Yes, I made a mistake. You are correct. Yeah. Anit issue එක මොකක්ද? What is the other issue? 2100 is opening finished goods. Right. You are correct. No, now I had. So thereby 435. මේක එතකොට වෙන්න ඕන oh my god. මේක හරියනේ? Yes. එතකොට මේක වෙන්න ඕන 4350. Right? Any question? No. Right. Of course, this you are minus, you get the difference, thereby this minus this, you get the GP so much. Then you get the profit before tax, profit before tax. Profit before tax is so much. Other income එකතු වෙලා මේකත් අඩු වෙන්න ඕන. ඒතර මේකත් minus තිබ්බන ලේසිනේ. එතකොට profit before tax කීයක් එනවද? Profit before tax එනවා yes 418ක්. මං හිතන්නේ tax එකත් ආවා අපට. tax එක තිබ්බ 40ක්. tax එක 40ක් 40000ක් තිබ්බනේ. Right? ඒකත් minus, no? මේක Excel sheet එකකින් සයිව තියාගන්න බෑ නැත්තම් ඉලක්ක අංක කරනකොට අඩුවක් වෙනවා නේද? එතකොට එක මයිනස් කියලා ගත්තොත් එක මයිනස් එතන අපිට profit එක එනවා. Profit after tax PAT, profit after tax is so much. Any question? Yes, good. So it is not need for production of it cost per unit when calculating cost per unit to closing issue. So is it not need to include production of it cost per unit when calculate cost per unit for closing unit goods? What do you mean by that? Production overhead cost per unit. No. Now here we calculate manufacturing cost, of course. This is the manufacturing cost, right? This is the manufacturing cost, but you can calculate the manufacturing cost per unit by dividing this by number of units you produce. That is okay. But as per the question, finished good stock valuation is given as right, yes. If you look at this part, finished goods valued at prime cost. You can use any method, but you have to remember whatever the method you use, you have to comply with the LKS too. But in this example, stock valued at prime cost, right? So thereby what I did was I took the prime cost per unit. Direct material 2 kg is 75, 150, direct labor 1.5 hours, 120. What I did was closing stock of finished goods I multiplied by 333. Right, good. That's why. Otherwise, of course, you can if it is silence, if the question is silence about valuing finished goods, what you have to do is you can divide this manufacturing cost by the number of units you produce during the 3 months, and you can really proportionately calculate the closing stock value. I think with this, this is the income statement, and we have to prepare the balance sheet now. Financial position. Financial position, you prepare the financial position, right, of the particular business. Financial position. Financial, type karko. So you prepare financial position as at 31st March 2021. That is here. So you have the non-current assets. Non-current assets, just look at the carrying, as per the question, not current assets, carrying value is 1,400. 1,400. Data 1,400. 1,400 කියන්නේ එකයි 400යි බිඳු දාන්න ඕන නිසා මම බිඳු දාගෙන යනවා. මේක ලේසි බිඳු දැවෙන්නේ නැත්තම්. less depreciation. Depreciation dip එක ගන්න ඕන අපි. එතන ඔබට මතක ඇති depreciation we had 2 places. Depreciation in the production overhead levels 10,000, 3 months 30, and also non-manufacturing another 30, altogether 60. So thereby you minus 60,000 depreciation, you get the what do you call net book value of non-current assets. Then you put raw material, you put finished goods, Raw material, of course, here raw material raw material තියෙන 1200 දහස් වලින් raw material 1.2 million. Then finished goods, of course, you have 3.3 million. Right. Then the debtors. Debtors. So we have March debtors. Sorry, February debtors. And we have March debtors. Okay, we put both separately. I think you can remember our calculation schedule. March debtors, of course, March sales selling up at March sales. You have to understand very clearly. I can't. This is February sales collection. This is the February one, 192,000. No? එකසිය අනූ දෙක. එමනේ අපට ආවේ නේද? ඊළඟට අපට මෙතන එන්න ඕන 432යි මෙන්න මේ දෙකේ එකතුවනේ. එහෙම නේද? These two එකතුව. ඒ කීයද? 720. 720යි there it represents 50%, two parts, 20% and 30%. So but cash balance එක cash budget එකෙන් අපට ගන්න වෙන්නේ I think it was negative. ඒක හැමම ගත්තත් කමක් නැහැ නේද? It was negative. So this is total assets. Total assets so much. So you get it. 687ක් එනවා. See whether our accounts is balancing. I don't know. Right. You have the stated capital. Then you have debtors, creditors, of course. Creditors also you have two balances. Yes. So March debtors is 432. How March debtors 432. March debtors 432. March debtors 432. No, the thing is that we prepare the balance sheet 31st March. එතකොට මෙන්න මේ කොනේදී අපට ලැබෙන්න තියෙන ඒවා එතන අපි දන්නවා මාර්ච් වලින් අපට 150ක sales credit sales නේ හම්බෙන්නේ. එතකොට මේ 130 හම්බෙලත් නෑ මාර්ච් වල. හැබැයි we have done the March sales. So thereby it's under accrual concept we have to get both correct. Yes. That is under accrual concept. Good. Then creditors බලාගමු කොහොමද කියලා. Creditors අපට තියෙන්න ඕන February creditors තියෙන්න ඕනේ. Feb තියෙන්න ඕන ඊට අමතරව March තියෙන්න ඕන. දැන් ඉතින් මේක balance වෙන්න ඕන කොහොම හරි නැත්නම් කොහේ හරි mistake එකක් ගන්නෙ. March. Okay. එතකොට බලන්න කොහෙද අපි යන්න ඕන March purchase budget එකනේ. purchase budget එකේ ඒක තියෙන්නේ. ඒතර purchase budget එකෙන් මේ නිල් පාට කරලා තියෙන දෙක හම්බෙන්නේ නෑනේ. නේද? That is this is February, this is March 1. ඒතර 900යි 1200. 900යි 1000 වලින් අපි හදන්නේ 900යි 1200යි නේ. That's all. Proposed dividend, income tax, we all took stated capital. Yes. So thereby this has to be now what is the stated capital? Stated capital has to be 4445 plus අපි එතන බිඳු තුනකුත් දාගමු නේද? එතකොට එතන වෙන්න ඕන minus profit after tax 458. එතකොට අපිට stated capital එක එන්නේ what they would got the 445 this one, right? Multiply minus 458 ne 458 comma 03 avune we found typo right. ඉතින් අපි දානවා ඒක මෙතෙන්ටනේ. එතකොට මේක එකතුව වෙන්න ඕන. ඒක තමයි ඉතින් වෙනසක් ආවොත් අපි කොහේ හරි බලන්න. Right, good, tally. Luckily tallied, no? Right, good. So that is our balance sheet. So you this is your equity and liability. Equity and liability. Equity and liability. So your total equity is equal to total liability. Oh. But here remember the cash is this data is abnormal since it's getting a negative GP. Normally we don't get a negative GP in a business, but that's all about you know the calculations. If you have any we will take the next part the next week. If you have any question I can answer, otherwise we will wind up the session. මේක අර මොකද්ද එක වගේ continue ගැන මේක ඇති දෙයක් නෑ ඇත්තටම. It's only matter of multiplying, adding, you know, simple question. Right. Then with this, thank you very much for your participation, and we will wind up the today's lecture. Thank you.